If you're going through a divorce at 60 in Canada and the family home is on the table, most lawyers and financial advisors are going to tell you one thing: sell the home, split the proceeds, and move on. But what if one of you wants to stay? What if selling is actually the last thing that either of you actually wants to do? The biggest thing stopping people from making that work is being able to afford to buy the other person out. Because in most cases, they don't want to continue to live together, and you're going to need some money for the other person to go out and purchase something. And most people assume that if they can't qualify for traditional mortgage, which on a fixed income is very common, the sale is inevitable. It's not, because there is another option, and almost nobody in Canada is talking about it. I'm Aleem from the Mortgage Free Faster channel, and let's get into it. Gray divorce. Couples separating after 55 or 60 is one of the fastest growing trends in Canada, and it creates a very specific financial problem. Here's a simple example. You and your spouse own a home worth $1 million. No mortgage. That means that you have $1 million in equity sitting in that property. In a divorce, that equity gets split. Each spouse is entitled to roughly $500,000. The most common solution is sell the house and split the proceeds, and both parties move on. But selling means both of you lose the home. There are legal fees, potential tax implications, and the emotional cost of leaving a place you may have lived in for decades. Now, if one spouse wants to stay, they'd need to buy the other one out. That means qualifying for a new mortgage, but they're on a fixed income. CPP, OAS, maybe a pension. Most traditional lenders won't approve them because they will not debt service. So what happens? They're forced to sell. Both of them lose the home. Here's what most people going through this don't know. There's a financial tool that most couples going through divorce never consider, and that many lawyers and financial advisors simply aren't aware of. It's called a reverse mortgage. Before you dismiss it, let me be direct about what it actually is, because most of what people think they know about reverse mortgages isn't accurate, at least not in Canada. In Canada, homeowners who are 55 or older can access a portion of their home equity as tax-free cash. No monthly mortgage payments. You keep the title of your home. The loan isn't repaid until you sell, move out, or pass away. Here's how this applies directly to gray divorce. The spouse who wants to stay uses a reverse mortgage to access $500,000 in equity and buy out their partner. The other spouse gets their $500,000. The staying spouse keeps the home. No monthly mortgage payments are required. The other spouse takes their money and can either buy something outright in cash, or if they don't qualify for a traditional mortgage on a fixed income as well, they can look at a reverse mortgage on their next property too. Clean, simple, and most people going through this have never even heard of it. Now, I know what some of you are thinking. Isn't a reverse mortgage a last resort? Something people use when they've run out of options? No. Used in a situation like this, a reverse mortgage is a financial settlement tool. It's how you keep the home, give your spouse their fair share, and avoid a forced sale that neither of you actually wanted. The other concern I hear is about interest accumulating. You're not making payments, but interest does grow over time. That's the trade-off that you need to understand going in. But compare that to the alternative: selling a home you've lived in for decades, paying legal fees, potentially triggering tax consequences, and both of you starting over. For many people, the picture looks very different when you weigh it all out. A few things worth understanding before you go down this path. To qualify, the primary requirement is age, 55 or older. Your income is not the determining factor. The equity in your home is. You can generally access up to 55% of your home's appraised value depending on your age, the property value, and where it's located in Canada. In a divorce situation, both spouses are typically still on title during the process. Your lawyer needs to be involved. This has to be structured carefully. Your lawyer handles the legal side, I handle the mortgage side. Together we make sure that the structure actually works for both parties. Here's the reality. Your bank isn't going to bring this up. Your lawyer may not know this product exists, and most financial advisors, they won't mention it because it's simply not in their area of expertise. The reverse mortgage as a divorce settlement tool is one of the most underused strategies in Canada right now. And for the right couple in the right situation, it changes everything. If you're going through a gray divorce and the family home is a major piece of the picture, Reach out before you make any decisions. My email is in the description and it comes directly to me. No obligation. We'll just talk you through your specific situation. If this opened your eyes to something you didn't know was possible, share it with someone going through this. It could be the most valuable thing that they see this week. I'm Aleem. Subscribe for more strategies that banks and other brokers are not going out of their way to teach you.